This as the world commemorates International Human Rights Day. The Commission's spokesperson Wisani Baloyi says the commemoration seeks to underscore the principle of rule of law, which provides essential framework for human rights accountability.
The 10th of December is a sacrosanct day on the calendar of South Africa in that it is the day on which the Constitution of South Africa was signed into law and also the day on which International Human Rights Day is observed. Organized under the theme Human Rights, Our Everyday Essential, the commemoration seeks to underscore the principle of the rule of law, which provide essential framework for human rights, accountability through just law, transparent governance, and impartial judiciary and access to justice.
Civil society researchers, advocacy groups and governments are calling for a collaborative effort to end stigma and discrimination against people living with HIV and AIDS. This emerged at the launch of the HIV Stigma Index 2.0 report in South Africa, Pretoria, today. The study compiled by the National Association of People Living with HIV and AIDS, the HSRC and the National AIDS Council captured the experiences of more than 5,000 participants across the country. Researchers say the findings mark a major step towards ending HIV as a public health threat. The report found persistent stigma to be a barrier to treatment and prevention, despite progress in reducing new infections. The HSRC senior researcher, Dr. Mpumi Zungu.
Our research has highlighted how stigma undermines access to HIV testing, treatment, psychological support, and ultimately how it affects the health, outcomes, and also well-being of the people living with HIV. So the index is a legacy, but it also incorporates the work that we have done over the years, using updated tools and methodologies, and reflects the current context while addressing the emerging challenges that we face.
Lastly, a fire at a multi-story building in the Indonesian capital has killed at least 20 people. Jakarta's police chief said firefighters were combing the building for any other victims. The BBC's Asturestra Ajengrastri explains.
The fire broke around lunchtime at the Terra Drone office complex in Kemayoran, central Jakarta, engulfing the 6-story building. Thick smoke poured from the upper floors as firefighters deployed 28 engines and about 100 personnel, with dramatic footage showing trapped employees being rescued by ladders. Police said the cause is still under investigation, while several bodies have been recovered and taken to hospital for identification. Officials say the fire may have been triggered by an exploding battery.
Recapping on your top stories, judges at the International Criminal Court have sentenced a Janjaweed militia leader to 20 years in prison for atrocities committed in Sudan's Darfur region. Ali Muhammad Ali Abd al-Rahman, also known as Ali Kushabi, was convicted in October on 27 counts of war crimes and crimes against humanity. Channel Africa News, I am Onele Tsinsi.
SABC News. The African Perspective.
In our sports headline, South African Parliament has grilled Sports Ministry over funds allocation. And Live Golf and PGA are informally talking about the measure. I'll be back with these and other stories at the bottom of the hour.
Business, trade, and investment opportunities that put the continent first. Africa in Business with Thami Ngubeni.
It is a very good afternoon to you, Kenya. Good afternoon, Senegal, Eritrea, Ghana, DRC. Good afternoon to you, Eswatini. Good afternoon, Tanzania. Good afternoon, Africa. Welcome to Africa in Business on Channel Africa. I'm Thami Ngubeni. On your agenda this afternoon, we'll look at the borrowing rate of Nigeria from the World Bank. You'll remember in 2023, President Tinubu started off borrowing $2.7 billion. And it was intended to go for various projects, including economic empowerment for women, renewable energy access, etc. But we'll look now at the cumulative cost of this entire borrowing for Nigeria estimates accounted to the value of $9.65 billion by the end of this year. So we'll take a closer look at that. And also the construction industry in South Africa somewhat rebounding, a slight increase there in the third quarter of 2025. And also it is the festive season, and traditionally in South Africa this tends to be one of the busiest shopping seasons ever. We'll be looking at safety as far as cash is concerned, even though many have migrated to internet banking and they've migrated to online purchases. But you'll find that in the township economy, where a lot of the trading takes place, cash is still king. How do we ensure safety during this festive season? That is our topic this afternoon in our feature with Standard Bank.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
We begin here this afternoon with a look at Nigeria's debt to the World Bank. Under the current administration of President Bola Tinubu, it's projected to reach approximately $9.65 billion by the end of this year, with the total amount of fresh loans secured since May of 2023 nearing $8.4 billion. It has been reported that the borrowing cycle under President Tinubu began with $2.7 billion in loans in 2023, and this was across 4 major projects, and that financing in that very same year was dominated by power sector recovery, renewable energy access, education for girls, as well as women's economic empowerment. For more on this, we joined this afternoon by Jeff Iatse, business editor at The Guardian newspaper. A very good afternoon to you. Welcome to Africa in Business. Good to have you with us.
Good afternoon. Nice to link up with you again once again. Good afternoon from Lagos.
So perhaps let's start off with looking at President Bola Tinubu's World Bank debt. How does it compare to previous administrations?
In terms of borrowing, yes, the current administration, other Bola Tinubu has also been indulging in those. Quite well, the speed of growth may not be that much, but if you understand the performance of it, the performance.
My apologies, Mr. Jeff. My apologies, sir. We really have a very bad line. I am going to take you back to our producer who's going to try and get you on a better line. That's Mr. Jeff Iatse, business editor at The Guardian newspaper. So we'll really compare how President Tinubu's borrowing fares in comparison to presidents before him, as well as his areas of focus, and where exactly have these funds been directed to. Are they the type of loans that are going to lead to infrastructural development? Are they the type of loans that will lead to progress in the country as opposed to more debt? That's Jeff Iatse. We'll be joining him once again in just a moment.
Parlez-vous couramment le français? Êtes-vous passionné par la radio? Et êtes-vous qualifié pour travailler en Afrique du Sud? Envoyez-nous votre CV et votre 3 minutes démo en MP3 à @channelafrica.co.za pour avoir une chance de rejoindre la famille Channel Africa. Si vous n'avez pas de réponse après 14 jours, cela signifie que vous n'avez pas été retenu. Channel Africa, la perspective africaine.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
It has gone exactly 12 minutes after 4 p.m. Central African time. We've got Jeff Iatse, business editor at The Guardian newspaper, back with us. Hopefully so we have a much better connection now. Perhaps let's start once again as we compare how the borrowing under President Tinubu fares in comparison to those who were predecessors to him. Mr. Jeff Iatse, are you with us, sir?
I'm here. I can hear you clearly.
Lovely. Thank you. I was saying, let's go back to the beginning. of our conversation, how does President Tinubu's World Bank debt compare to the previous administrations?
Well, I think it would be fair we look at the entire debt portfolio of Nigeria in this context. If you look at if you look at the past administration, the growth of debt, it was, for me, the growth was much higher than what we see now. For instance, we're already going to close to 100 billion before Tinubu assumed office. But the speed of growth we've seen the past 2-3 years is partly attributed to the devaluation of the naira, the depreciation of the naira. In the past few years, or 3 years, maybe in the past 2 years, naira has lost about over 60% of its value. So in real term, yes, nominal term, the debt has grown speedily, but in real term, it is not, the difference is not really that much. I give you an example. About 2014, even before Buhari assumed office, the national debt stock was about 12 trillion. That was equivalent to about $60 billion. But today we are talking about 152 trillion naira. But in naira terms, the growth is not even is not up to 100%. It's not up to 100%. You will be talking about only maybe from 60 billion to 104 or 5 billion dollar. That is not much in terms of growth.
And to what extent has the recent surge in borrowing been used for long-term investment versus short-term budget support?
That is where I have issue with the government. Much of the borrowing does it go into sustainable program, sustainable project or infrastructure, things that can increase productivity? Because if you look at the theory of debt, of course, one of the theory which I believe so much is you can borrow if you are sure that the future generation will be richer than today's generation. They will be able to pay. So they will be able to pay back the loan. But that is not the case. You are not investing much in infrastructure. You are not investing much in education. You are not investing much in power. You are not investing much in in train and port infrastructure. So it means that you are literally postponing the poverty crisis. We are not investing much in this. And another thing that worries me about the debt, a lot of people talk about debt to GDP, which is the excuse the government use to borrow more money. Because as we speak today, Nigeria debt to GDP is less than 50% compared to global average, which is over 200%. That is good. But how much do you spend on servicing your debt? Nigeria is spending close to 70% of its revenue to service debt. That is huge. Literally, you are leaving nothing left for investment in infrastructure, which is like digging deep in the poverty or that development trap. That is worrying.
I'd like to pick up on two things that you mentioned. The first one is where these funds are actually being channeled to. In 2023, the loan that President Tinubu got from the World Bank amounting to $2.7 billion, he said was going to go to 4 major areas, and those areas being the education for young girls, empowerment for women as far as economic empowerment is concerned, the power sector recovery, as well as renewable energy access. Those were highlighted as the 4 pillars for that particular loan. Have these funds been channeled to those various sectors?
At best, what I see as an individual is that most of this program, most of those plans are still documents. They have not been translated to real projects. For instance, if you ask me, where is renewable energy? Compared to the base year, the baseline before you started borrowing. Where are we on power? Where are we on women empowerment? The government has really not done anything significant in this area. The government uses some manner of excuses to borrow. You hear of empowerment, which is vague. You hear of intervention, and all of those things. But the fraud in most cases, and which is the problem, are not channeled to those areas. Which is the problem I have with World Bank? Do you without money? If you are led to a government that has specific projects or which it is led for, you have a responsibility to monitor and track those projects. But I am not sure that the World Bank is doing that. In that case, it means the World Bank itself is digging Nigeria deeper into the debt crisis. He dodging the government in debt.
Mr. Jeff,
The government has already invested in those areas.
Mr. Jeffrey, I'd say we'll leave it at that for this afternoon. Thank you so much for your analysis of the World Bank debt that Nigeria has. We thank you for your time, sir.
My pleasure.
Thank you. That's Jeff Iatse. He's the business editor at The Guardian newspaper.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
It has gone exactly 19 minutes after 4 p.m. Central African time as we turn our sights now to South Africa, where the construction sector is showing signs of life once again. In the third quarter of 2025, while the economy grew by just 0.5%, construction managed a small rise of 0.1 percentage point, and the Afrimat Construction Index, a measure of activity in the construction sector, jumped more than 10%. At the same time, government has launched its first infrastructure and development finance bond aimed at strengthening capital formation and expanding the national infrastructure pipeline. To help us better understand the significance of these developments and what they mean for South Africa's economic trajectory, we're joined by Chief Economist and Director at Econometrics, Dr. Azza Jammine. Dr. Jammine, good to be having you with us once again. Welcome.
Thank you to you, and good afternoon to your listeners.
So we are seeing, Doctor, the construction sector showing a slight uptick of 0.1 percentage point in Q3, while the measure of the construction activity, the Afrimat Construction Index, jumped over 10%. Is the sector officially turning the tide?
It appears as if it might be turning the tide, but you've got to bear in mind that it has been an extremely depressed sector. The level of investment in construction has fallen by more than anything else in the economy. The GDP of construction has been by far the weakest of any of the 10 sectors of the economy in the last decade.
That's quite ironic, especially remember President Cyril Ramaphosa, proclaiming in the State of the Nation address a couple of years ago that his intention was to turn South Africa into a construction site. Why is this not working out?
Well, there have been a number of reasons. Firstly, and probably the most positive one that I would like to think of is that, planning construction activities takes time, and we may not yet have seen the full throughput of all the plans that have been put in place in recent years. The second reason is, and this has been a very strong reason, is that criminal syndicates have really been moving around various construction projects and actually scuppering them completely, the so-called construction mafia, where they've been demanding up to 30% of the revenue of any construction project for themselves. And this has really interrupted a lot of public sector work in construction, especially. Thirdly, more generally, there's been a lack of confidence in the outlook for the South African economy. Unfortunately, it becomes a vicious circle. The fact that construction activity has been very low is in large measure due to the fact that people have been looking at the growth rate of the South African economy at 1% or less and saying, well, is there any point in creating more capacity when growth is so low? And so they've been refraining from actually investing in new investment activities. So it's a combination of all those factors. Fourthly, more generally, one asks oneself whether the municipalities are not playing a big role in the lack of construction work, in that municipalities have become ever more enmeshed in incompetence and bureaucracy, and due to the cadre deployment process of the ANC. And where people have been appointed to decision-making positions where they really don't understand what needs to be done or how to do it. And the people that they're employed in municipalities have not had the commensurate skills to, especially in engineering, to actually undertake many of these investment projects.
We have, Dr. Azar, now focused on the reasons why construction hasn't really taken off as much as planned in the recent past. But looking at its current performance now, 0.1 percentage point increase, and in general with Afromet construction index, the entire sector jumping more than 10%. What are the factors that are driving this improvement, slight though it may be, and perhaps on the back of that as well, which parts of the sector are showing the most momentum right now?
Well, we've had a whole lot of initiatives on the part of the public sector to embark upon higher construction activity. These are of legendary proportions. In the budget itself, the government has budgeted for 1.04 trillion rand to be spent over the next 3 years by the public sector in construction activity. What we are now seeing is simply a follow-through of some of these projects. But the second factor is that the government has, under the leadership of President Ramaphosa in recent years, has begun embracing to a greater extent the notion of incorporating the private sector in many of these infrastructural projects. And that in turn is helping to accelerate some of the investment that is taking place, and hopefully because the private sector does contain many of the skills that would otherwise have been missing from the public sector. So that is also helping. Thirdly, generally, the mood in the economy has been gradually improving because of a variety of factors, including the fact that fiscal discipline under the newly formed government of national unity over the past year has started seeing some structural reforms, especially in energy availability and in logistics, that are helping to accelerate some construction, and in actually trying to improve logistics and energy supply. There's a lot of construction work involved there as well, and that's also helping to boost it. But I have to emphasize once more that construction has fallen so far. We're talking about not 20 or 30, but 50% over the past decade. So, we are lifting off a very low base. Indeed. It doesn't take a huge amount of effort to do so, yeah.
And it's quite a dramatic fall. Thank you very much, Dr. Azar Jammine, for that, putting into context the construction industry and just how far it has fallen. Yes, this may be a slight increase, very, very slight, but really considering where the industry comes from 10 years ago, it really is a significant decline. Wondering if the Infrastructure and Development Finance Bond that government has just issued will in some way boost the construction activity and investment. That remains to be seen. It's 27 minutes after 4.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus. The African perspective.
In our previous conversation with Dr. Azar Jammine, we did touch on the impact of the construction mafia on performance within the construction industry. And following up from that, today is the International Anti-Corruption Day. It's a day aimed at raising global awareness of the detrimental effects of corruption, as well as the importance of preventing and combating it. The forensics and cybersecurity team at Forvis Mazars says fraud and corruption are no longer about brown envelopes, that they've become a whole lot more sophisticated. They use emails and manipulated digital assets as well. They further add that the greatest failures in fraud prevention are seldom technological, but rather cultural, and that globally, nearly half of all fraud cases result in no recovery of losses, highlighting that detection without ethical governance is inefficient. For more on this, we're joined by Dr. Nishal Kusial, Head of Digital Forensics and AI at Forvis Mazars in South Africa. Dr. Kusial, welcome to African Business. Good to have you with us.
Wonderful being here. Thank you so much. It's indeed a privilege. Greetings to viewers and greetings to your esteemed colleagues around the table.
Thank you so much, sir. Let's start off with some of the newly identified risks that are emerging in the anti-corruption fight. It looks like it's not corruption the way that it was done before, that there are some new tricks that they've got up their sleeves.
Wonderful. And I think that's a very astute observation. What we are seeing in a nutshell is that the technological landscape and in our reality we find ourselves in, the core message is that corruption in the digital age also can't be separated from digital safety, organizational culture, or inclusion. The tools that are being used are getting more sophisticated. And what we are realizing that is that when it comes down to the perpetrators of these crimes, these fraudsters are well educated, they're well intentional, and they exploit weaknesses within the technological and governance frameworks. Technology alone is part of the focus areas, but culture in itself is also important. So a holistic framework to engage is crucial. The new mechanisms and the holistic approaches from fraudsters nowadays are indeed something which we haven't seen before. Technology only spurs them on. Our new digital reality in the sense of artificial intelligence and otherwise, which will also evolves the undesirable components within society as a whole. So we need to be one step ahead.
You spoke there around issues of regulation and government frameworks. And on that topic, how are cryptocurrencies being used in bribery, money laundering and illicit financial flows? Because the measures and the governance around cryptocurrencies still not yet firmly globally established.
Most certainly. And I think to articulate that very, very specifically insofar as the utilization of the crypto landscape is concerned, what we have seen is that crypto is indeed a mechanism of the flow of funds. The issue that we have seen within the cryptographic landscape and also the cryptocurrency landscape is that it's easier for perpetrators of crime to siphon out funds, to hide the actual origin and the flow of funds. As time is going on, and indeed where we find ourselves at right now, is that there are tools which allow us to get more involved and get more adequately prepared to track these flow of funds. But traditionally, we've used and we've seen cryptocurrency as mechanisms in order to facilitate the movement of funds, illicit and or similarly otherwise, in ways that essentially were untraceable presumptuously. Nowadays, however, with more advanced, sophisticated cyber technology and cybersecurity and digital forensics mechanisms, we are able to track cybersecurity related crypto funds. But it is a different ballgame entirely when you are looking at your traditional banking transactional landscape and the ability to track that versus your cryptocurrency landscape and the ability to track that.
How do you balance the scales between, innovation within the fintech space and the tracking and the tracing of the digital financial transactions without innovation being impeded by the possible backlash and the negative that can come from this innovation?
Right. Brilliant question. And I think one of the things which innovation needs to be fixated on is it needs to be tangibly aware of what the surrounding environment is. Innovation in isolation without taking into account what is happening on the criminal element side, especially if we look at the forensics landscape, is not going to be innovation that speaks to the proposition and the issues we find ourselves in. In a nutshell, if you match innovation to what is happening within the evolution of the criminal element, that would give you an ability to use innovation in a way that is both protagonistic against the antagonists within the technological landscape and as a tool to prevent issues as they occur. We've heard about your traditional ransomware. We've heard about your traditional phishing attempts. The more sophisticated attacks in nowadays that we see is alluding to steganography, polymorphic approaches, man-in-the-middle attacks. So without getting too technical, innovation in itself has to be conscious about the surrounding environment it finds itself in, insofar as the criminal element is concerned, and measure and develop itself accordingly in protagonism against the antagonists we find in society.
Dr. Nishal Kusyal, thank you so much for focusing on this really important aspect of, not only cybersecurity, but corruption in all of its forms, highlighting their conscious innovation. That's quite a phrase. I think it's a quotable phrase. Dr. Nishal Kusyal, Head of Digital Forensics and AI at Forvis Mazars in South Africa. Thank you for your time, sir.
Thank you.
Thank you. He takes us to exactly 4:34. Thank you so much to our markets desk for affording us that little bit of extra time so we can really get into the meat of that conversation. With that, we take you to the markets desk where Winter Headbush is standing by with your latest market indicators.
Business news on Channel Africa. The African perspective.
Thanks, Thami. Good afternoon. Now, final look at the indicators this afternoon. $1 is trading at 16 Rand 97 in South Africa. In Botswana, it's trading at 13 Pula 15. Namibia, 16 Namibian dollars 97. The Zambian kwacha is trading at 23 kwacha 10. In Kenya, the dollar is trading at 128 shilling 55. In Ethiopia, 155 birr 4. Uganda, 3,517 shilling, and in Tanzania, it's at 2,446 shilling. $1 in Nigeria is trading at 1,449 naira this afternoon. In Egypt, the dollar is trading at 47 Egyptian pound 45. In Tunisia, it's at 2 dinar 92, while Algeria is trading at 129 dinar and 6. In Morocco, the dollar will cost you 9 dirham 10. In Angola, it's trading at 912 kwanza, while the Congolese franc is trading at 2,222 to the US dollar. Looking at commodities, gold is trading at $4,197 per ounce, platinum $1,656 per ounce, while Brent crude oil is at $62.33 a barrel. And that's the indicators. For any business stories you'd like to share with us, please do send us an email to newsroom@channelafrica.co.za or give us a call on +2711 714 4459. For Channel Africa Business, I am Buntle Headbush.
Business news on Channel Africa. The African perspective.
Parlez-vous couramment le français? Êtes-vous passionné par la radio? Et êtes-vous qualifié pour travailler en Afrique du Sud? Envoyez-nous votre CV et vos 3 minutes démo en MP3 à @channelafrica.co.za pour avoir une chance de rejoindre la famille Channel Africa. Si vous n'avez pas de réponse après 14 jours, cela signifie que vous n'avez pas été retenu. Channel Africa, la perspective africaine.
And for the latest from the business of sport, here is Figile Lengwate.
Sports on Channel Africa. The African perspective.
Thank you, Thami. We kick off with football news, sports in general. In the business of sports, South African Sports Minister Gayton McKenzie did not attend the Portfolio Committee meeting where he was supposed to be grilled by the department and Parliament for taking money from sports bodies to his VAR project. Mackenzie's departmental officials were taken to task in Parliament over the decision to take $4 million from cash-strapped sports federations and give it to video assistant referee, the VAR. National Treasury recently blocked Mackenzie's planned reallocation, meaning money will go back to the sports bodies, though it approved $1 million for the video project, for which Mackenzie had budgeted $5 million. But some members of the Portfolio Committee for Sports, Arts and Culture grilled department managers with one common theme of questions centering on the reason for initial cutting grants to federations. And Chipco Holdings chairperson and Chippa United owners Viwe Chippa Mpengesi has officially taken ownership of the newly rebranded Africa School of Excellence, signaling a fresh era for one of South African football's most storied development institutions. Formerly known as the Transnet Safa School of Excellence, the academy was formally handed over to Chipco Holdings, bringing an end to Transnet's 31-year stewardship. Mpengesi has outlined an ambitious vision to transform the facilities into a world-class academy. Transnet's decision to relinquish control came after years of financial strain. The state-owned company has spent more than $12 million running the school, but in recent years has struggled to meet the institution's operational demands. And Lydia Munyepao, that is South Africa's football governing body, Chief Executive Officer Lydia Munyepao, is optimistic that the ingoing negotiations about Bafana Bafana players' bonuses at the upcoming AFCON in Morocco. The team is going to camp today at the University of Pretoria. She emphasized that early dialogue with the team's leadership group has already begun with the aim of ensuring uninterrupted preparations for the continental showpiece. SAFA CEO Lydia Munyepao.
Yeah, we had conversations with the leadership of the senior players in Bafana Bafana when they were in camp last time in Sandton. So the talks have begun. Everyone has laid their cards on the table. It's about getting approval for what they have proposed and what we have proposed at the same time. We need to find each other, but I can assure you that before the camp starts, we will all be on the same page.
And we end with golf news. Live Golf CEO Scott O'Neill says informal conversations between the Saudi-funded circuit and the PGA Tour are continuing, but any hope of ending the sport's longest-running civil war is not currently on the horizon. O'Neill maintains regular contact with PGA Tour CEO Brian Rollab. Now, the June 2023, before either were in the current role, Live Golf is a heavily loss-making venture funded by Saudi Arabia's Public Investment Fund, the PIF, with reported losses exceeding 1.46 billion through 2024, despite increasing revenues due to massive spending on player contracts and operations, leading to a significant cash burn and a difficult path to profitability, though PIF remains committed to its long-term vision. PGA funds refers primarily to substantial prize money and financial programs like grants for professional golfers on the PGA Tour. For any sports stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +2711 714 445459. For any sports stories you'd like to share with us, I'm Figile Lingwati with a sports update.
Sports on Channel Africa. The African perspective. From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
It is exactly 4:41 Central African time. Thank you to Buntle Hedbush and Figile Lingwati. We turn our sights now to Ethiopian markets, where the Ethiopian Capital Market Authority has announced that the legal and regulatory framework enabling the participation of foreign investors in the country's capital market system has now been finalized and will be made public shortly. Also, the government has completed its submission for the fourth review of its International Monetary Fund extended credit facility, with officials expecting a staff-level agreement to be signed shortly. To discuss, we're joined on the line by Merid Fikurahannes, founder and CEO of Pragma Investment Advisory. A very good afternoon to you, Merid. Good to be talking to you once again. Welcome.
Always a pleasure to be on the show. Thank you.
So how significant, Mered, is Ethiopian Capital Market Authority's move to open Ethiopia's capital markets to foreign investors rather, and this is in terms of market development as well as economic liberalization?
Absolutely. This is a huge milestone. I think let me put it this way. It is a huge milestone because, mind you, 55 decades ago, we used to have a capital market and foreign investors used to participate in it, but it was not formalized. But now, after 5 decades, now the regulator has been working very hard to establish the market. The market infrastructure is there. The companies are already being registered, dematerializing their securities. And ahead of the game, the authority is taking the lead, the initiative at the same time to say that, listen, guys, we want the foreign investors to come in and also invest, and we're already preparing the regulation. It shows ownership of the process, to be honest with you. And then the second thing is that it has been 18 months since we floated the currency, and on top of that, now the capital market aligning itself. Now that there is a market rate operating within the economy, so that allowing the foreign capital to come in and also opening capital account in this manner, it shows truly owning the process itself.
I mean, certainly a positive signal around Ethiopia's broader economic reform agenda and commitment to market openness. But on the flip side of that, how important is this review for Ethiopia, given its ongoing debt challenges as well as the forex exchanges, or rather the forex shortages?
Yes, absolutely. So it is very much important in a sense that, mind you, the IMF program is a 4-year program. Okay, it will be ended by 2028, and it has been in progress for the past 18 months, and now it has already reached the 4th review. So, mind you, the IMF is the program. The way it works is Ethiopia commits itself in terms of delivering the reforms, and then IMF delivers the required financing. The financial need of that, which is the total package is around $3.4 billion that comes in stage. So having the review with the deputy managing director being present here in Addis Ababa last week with the officials, with the authorities. The Nigel Clerk was here and visiting the reforms and the progress as well. It shows that IMF is also committed, and Ethiopia is also committed, mind you. As much as possible, Ethiopia is trying to deliver on its promise of the reform package, and then IMF is also following suit, saying, okay, we're going to release the fund, because mind you, this is the 4th one. Once the start level agreement is being reached, it will go to the board, and once the board approve it, Ethiopia is going to get another 191 million SDR package of funding that it needs to further stabilize the to stabilize the budget of the government, and also to stabilize the macroeconomy as well. So the good one thing it was expected in this process was before December, Ethiopia promised that it will finalize the Eurobond negotiation. Apparently, it didn't happen. It reached an impasse. But the bondholders are willing to negotiate, and then the Ethiopian authorities are also willing to renegotiate, and then they set a new deadline saying that by June 2026 we'll finalize it. So Ethiopia is negotiating in good faith, and at the same time the bondholders also are willing to negotiate as well. So yeah, it is very much important for Ethiopia to have the IMF on this.
You did focus on some of the positives that can come out of a positive 4th review. But could it also perhaps accelerate the pace of debt restructuring with bilateral and private creditors?
Yes, absolutely. Yes, absolutely. Because mind you, if we cannot go through this, it will affect Ethiopia. It will affect the Ethiopian. It will affect the momentum of the reforms. It will affect the momentum of the country's macroeconomic reforms. It will affect everybody on the ground, no doubt about that. But at the same time, one thing it really does is, that like IMF giving a strong support, which Ethiopia is also negotiating in a good faith with the Euro bond holders, as it adds a momentum for the negotiation aspect. Because mind you, the last impasse, if you see their last negotiation, and mind you, all of these Euro bond holders are pension funds in America, money market, asset managers, JP Morgans, Lazards, those are BlackRocks. those are those are the holders of the Eurobond, and those are what Ethiopia is negotiating with. And one of the things they did not agree was they agreed on restructuring the Eurobond. They agreed on the cutting the interest, the coupon rate, all of that they agreed. But the one thing they did not agree was the VR, the value recovery instrument, VR instrument. So there is an impasse, but it shows that there's a good commitment, and Ethiopia is negotiating in a good faith, and the Eurobond holders saying, okay, we're willing to continue the negotiation. So it definitely adds momentum and to the negotiation.
Merid Fikri Hannes, always a pleasure, sir. Thank you so much as we focus on the Ethiopian Capital Market Authority and the announcement of the legal and regulatory framework to enable the participation of foreign investors in the country's capital market system, that having been finalized. Thank you so much. Merid Fikri Hannes is the founder and CEO of Pragma Investment Advisory.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
We turn our focus now to Chinese exports to Africa. Now, those are on track to surpass $200 billion in this year, which is 2025, as Beijing continues to navigate a protracted trade war with the United States. New customs data shows that China shipped $122 billion worth of goods to the continent, and this is just in the first 8 months of the year, putting it firmly on pace to hit that milestone. During the same period, Africa exported $87 billion to China, a modest 2.3% increase, widening the continent's trade deficit to nearly $60 billion. The bulk of Africa's imports from China continue to be machinery, heavy equipment, automobiles, as well as metal products. Channel Africa's economics reporter Innocent Semosa has more.
In 2024, trade between Africa and China climbed to $295.6 billion, marking the fourth consecutive year of record-breaking figures. In an effort to strengthen African export capacity, China has also waived tariffs for 53 African countries with which it maintains diplomatic relations. Director and Chief Economist, Econometrics Dr. Azza Jamin shares some long-term implications of Africa's widening trade deficit with China, especially with Chinese exports surpasses $200 billion in 2025.
Africa is basically running a massive current account deficits. Money is flowing out of the continent in order to purchase machinery and equipment or other goods from China, and ultimately what it means is that African countries will see their currencies depreciating sharply, and that being inflationary, resulting in higher interest rates than would otherwise have been necessary. And that, of course, is negative for economic growth for the continent.
But to what extent can China's tariff waiver for 53 African countries actually improving Africa's export competitiveness and reduce the current trade imbalance?
Theoretically, not all imports from China are necessarily bad, and are certainly not all consumer goods, and to the extent that machinery and equipment and investment goods are purchased, theoretically they could help to promote development and production in Africa itself. But that would also require Africa to acquire the skills and the infrastructure with which to develop its industries, especially in the mineral sphere where it has the greatest amount of resources.
Dr. Azza Jamin warns that China's dominance in supply machinery, vehicles and heavy equipment could hinder Africa's industrial development and slow efforts to build local manufacturing capacity, largely due to skill shortages across the continent.
If a high proportion of the imports is of critical investment goods that are needed to develop Africa's internal capacity, then running a trade deficit for a while with China in order to purchase these goods could turn out to be positive. But what is required, of course, is the development of skills to know how to use the equipment in order to promote industrialization in Africa. And I'm not sure that the skills within the continent have been developed sufficiently yet to result in that growing independence as a result of internal industrialization. That is one of the huge challenges that Africa faces, and it's going to be a long-term process.
With trade expanding but imbalances widening, the real test will be whether Africa can leverage new opportunities to strengthen its own industrial and export capacity. For Channel Africa News, I'm Innocent Simos in Johannesburg.
It's gone exactly 4:53 Central African time, and we say bonjour to Voix d'Afrique. They'll be joining us at the top of the hour. Comme ça va,
Ça
Joël?
va, merci Thami, bonjour à tous les auditeurs de Channel Africa. Sur Voix d'Afrique, tout à l'heure, il sera question de la tension entre Bujumbura et Kigali. En effet, le Burundi accuse le Rwanda de continuer à mener des attaques contre ses positions en RDC. Et nous parlerons aussi des autorités militaires de Guinée-Bissau qui ont adopté une charte nationale de transition qui établit un cadre juridique transitoire de 12 mois. C'est tout à l'heure sur Vue d'Afrique. Merci de rester connecté. Merci Thami.
Merci beaucoup. She joins us at the top of the hour.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
Now, with South Africa's business trading period now officially in full swing, businesses face a very critical opportunity and perhaps an even bigger challenge as well. And what is that? Managing cash safely and efficiently. Despite the rise of digital payments, cash does remain the backbone of commerce, especially in township and informal market economies, where over 59% of transactions are still cash-based. This is according to the data from the bank's small medium enterprises, that's the SME clients from Standard Bank. Now, effective cash management, especially during busy periods such as the festive season, is more than operational. It's a strategic advantage. For more on this, we joined on the line by Dwayne Breert, Head of Cash and Distribution at Business and Commercial Banking, Standard Bank, South Africa. A very good afternoon to you. Good to have you with us. And dare I say, happy festive season.
Thami, thank you very much for having me here today. A happy festive season to you as well, and hello to all the listeners.
So why is it that cash remains such a critical part of some businesses in South Africa, especially in the wake of, the digital economy, online banking, and really so many solutions for digital payments?
Thami, great question. I think from our perspective, cash still remains a crucial part of South African businesses. For a complex needs and fundamental financial reasons, the dominance in the informal economy is still largely cash-based, as mentioned. And because we still have a massive informal sector where cash is still king, we understand that cash provides the level of financial inclusion to the informal economy, and cash is still the only universal payment method still available today. Despite the challenges, from a cash perspective and recognizing digital growth in this economy, we still are still faced, with the preference of cash for convenience, simplicity, and a greater sense of control over business spending. There are a lot of, industry initiatives like PayShap, etc., that will release some of this pressure on these lines. But largely, we recognize the importance of cash. Thank you.
And so how can effective cash management become a strategic advantage for businesses, especially during this peak trading period?
So it still remains a core part of how customers still transact in this particular environment. So how we actually manage the cash, reduce the exposure, and look at options of getting cash into the system as quickly as possible. So we're talking about effective cash management during the crucial peak seasons. The cash management solutions that is offered widely in the industry facilitates and helps with this automation, reconciliation, and also take the focus to where it needs to be. Thami, as they say, time is money, and the more time you have, the more money you can make. And business owners and managers need to invest time in doing business in an affordable way. Also looking at innovative platforms, which I know from a Stanbic perspective we advocate for. The operational side is ultimately on the cash flow liquidity.
There is also the issue, Dwayne, of safety when you're handling cash. Could we talk about how businesses can limit on-site cash and reduce exposure to crime? And also on the back of that, if you could explain how yourselves as Standard Bank and your secure cash in transit services are helping businesses to safeguard their revenue.
Honestly, Thami, I think given the criticality of cash and also limiting the amount of cash being held on site and reducing the criminal exposure is a critical piece, especially this time of the year as well. So there are practical steps that businesses can take in implementing some of these mitigating factors and reducing this risk exposure. So implementing cash management technologies such as smart safes is always the quick and the easiest way of implementing safety precautions on site. We're also looking at, how do you actually eliminate predictable routines from a banking perspective? Criminals often surveil businesses' routines and daily patterns in order to establish commonality on those. Optimizing cash holdings is ultimately what needs to be driven from a business perspective, and leveraging, digital payments platforms is also part and parcel of that. But having your regular engagements to the branch, to the ATMs, and also implementing these cash management technologies is ultimately the quickest and most effective way of dealing with the crime exposure.
And we'll have to leave it at that for this afternoon. Mr. Dwayne Breert, thank you so much for highlighting such a critical issue that's very close to home for everybody this festive season, both for consumers, for shoppers, as well as businesses. That's Mr. Dwayne Breert, Head of Cash and Distribution at Business and Commercial Banking, Standard Bank,
Thank you so much.
South Africa. Thank
Appreciate
you,
it.
sir. He takes us to exactly 5 p.m. Central African time. That's how we, as African Business, bid you farewell today as we make way for Vous d'Afrique and Joël coming up.
Are you fluent in French, Chinyanja, Portuguese, and Kiswahili? Are you passionate about radio? And are you looking to work in South Africa? Do you have papers that qualify you to work in South Africa? In that case, we might have an opportunity for you to work for Channel Africa